Hey everyone, welcome back to my channel. It's Warren here, helping you to master your money and build your long-term wealth. Today, we are talking about building generational wealth through funds and how to choose the right fund for you. In this video, I'm going to do a live demo and I'll show you exactly how I research funds and how to choose the best one for you with confidence. I'd highly recommend watching my previous video first on what a fund is and how they benefit you so that you know the context for this video and then coming back here. Welcome back, guys. By the way, do me a solid please and like and share this video with a friend. I'm trying to build a platform for wealth building and those likes and those shares really help, guys. So do me a quick solid and just push that button. So I've been investing in funds for just over 3 years now, and these are my returns to date. This is my portfolio of fund investments. This is the total that I have invested, and this is the profit that I've made over the last few years by investing in funds. I do nothing except for set up a standing order that automatically invests in various funds. It's hands off. I barely look at this, and this is a return that I've made on an annual basis, just under 11%. If you want to learn more about funds and how you can make these types of passive returns, watch till the end of this video and we'll get into the detail. So here we are in Morningstar. What I'm going to do is take you through step by step how I research funds, exchange traded funds. So I'm going to click on ETFs right here, and what I'm going to go down to is the tools section, and I'm going to select the Etf Screener, which is a tool that you can use to research them. So when you click on this, what it will take you to is a page with various drop downs here. What I'm going to do is just show you each one. So ETF provider, I'm going to select all because I want all of the ETFs to show up in my search results. But if you are one of those people who've done lots of research already, or you like a particular provider and you want to see only their funds, by all means select them. But I'm going to select all because I want everything. Morningstar rating, so I'll quickly show you the ratings. Whenever you choose a fund, it's going to have a star rating and an analyst rating at a minimum. Now the star ratings go from 1 to 5 stars, with 5 being the best and 1 being the least. And what it's based on is basically the past performance. So if the fund has a past track record of solid returns in line of expectations, it's going to be at the higher rating. Analyst ratings go from gold, silver, bronze down to under review, negative and neutral. These are forward-looking ratings on how well they think that the fund is going to perform, based on usually interviews with the fund managers and the employees and other sources. So gold, of course, is the highest. Then you also have a quantitative rating, which again is forward-looking, and it's based on various data as well as analysts' forward-looking reviews, and it's all machine learning generated, so there's no human involved. It's an automated rating. So those are the different types of ratings, guys. So back to this page, I'm going to select 3-star ratings and above to give me a good range of results. Ongoing charge, guys, you want to keep this as low as possible. This is basically the cost of the fund manager, if there is one, so it's their compensation for managing the fund as well as all the admin costs. So I'm going to go for the lowest one possible because I don't want it to eat into my profits. Management style, active versus passive. Active, as we mentioned, has an actual fund manager making day-to-day decisions for the investments of the fund, and passive means that it's all automated, so it's tracking, say, an index like the FTSE 100 or the S&P 500 or a particular market or industry sector. So for now, I am going to say all. Fund size, I'm open to all fund sizes. This is the value of all of the assets within the fund. I'm open, so I'm going to leave it open. Yield, we're going to keep this blank, guys, because this relates specifically to bonds. If you don't know what bonds are, they're essentially IOUs given out by companies and governments. You might have seen a lot in the news over the past few years about quantitative easing, governments printing money. A lot of this is done via bonds, which is basically the government saying, hey, we need some money. Can we borrow some money off of individuals, banks, pension funds, large corporates, and in return we'll give you an IOU, which basically means we'll pay you interest on the amount that we've borrowed, and then we'll pay you the full amount back at the end of the term. So we're not going for bonds for the sake of this. We want shares, guys. And then lastly, geographical regions. We talk a lot about diversification. We want to be open to all regions across the world, so I'm going to select all. And now we're going to see the results. So if we scroll down, we have 3,911. That's a lot of results. So what I'm going to do is I'm going to try and narrow this down slightly further. So I'm going to go for even higher rated funds, 4 stars. That brings it down to 2,000. Well, let's go for 5 stars, 583. Okay, so these are the best funds according to Morningstar, which again are an industry-wide rating tool. Then I'm going to go for passive funds. So I want funds that are exclusively set up to track a certain index or market or sector and takes out the human element, because fund managers are not created equally and some are imperfect. So let's go for passive. Wow, only brings it down slightly to 579, but that's okay. And then lastly, guys, what I'm going to do is I'm going to select slightly bigger funds, and I'm not saying that bigger funds are necessarily better, but usually the bigger funds are more established and more professionally run ones. So we'll go for 500 million to a billion. 47. Okay, so if we scroll down we can see the results. Now let's pay attention first to the category. The category basically tells us what type of asset classes the fund is invested in. So some of them are growth equity. So equity means shares, basically stocks and shares. So this is a fund. These funds are funds that are investing in growth stocks. Now blended equity is still stocks, but it's a mixture of value and growth stocks. So that is basically more diversification. It's not just growth stocks, and we're talking about diversification in this particular video, so I'm going to lean more towards these ones. But let's just have a quick look at what else is out there in terms of the results. Again, more blended equity, and then on the last page, blended equity. Great, more blended equity. And going on blended equity, there are some government bonds here and they have the yields as we discussed earlier. And on the last page, some bonds with yields and more blended equity. Okay, now let's look at the next column along, which is the charge. I mentioned that we want to keep the charge as low as possible. So we have blended equity funds at 0.25%. That's good from a cost perspective. Are there any that are lower than this? We have 0.2, but those are bonds. Blended equity 0.33. Let's see what else there is. Blended equity 0.25. Okay, then on the first page again, these are all the growth funds. So let's look at the 0.25 ones, because those look like they're going to be the lowest. So at this stage, guys, I'm looking for blended equity funds with a charge of 0.25%. And now at this point, we're just going to have a look at them and see what's in them. So let's start with this one. Now with Morningstar, when you click on the actual fund, it takes you into the detail of what is actually sitting behind the fund, what's in it. So you're going to have stuff like how risky it is, what the return has been, and what the actual fund is invested in from an asset class perspective. So let's first have a look at what it's invested in. You can do that by clicking on the portfolio option, and what it's going to tell you are a few things. So asset allocation, it's going to tell you the asset class. So we saw in Morningstar that this is blended equity, so it's invested in stocks and shares. And when you look at this, it has US equity, so it's basically talking about US stocks. 59% of this fund is US stocks, and then basically the rest of it, the other 41% is non-US stocks, so in the rest of the world. And if we scroll down, we can see the actual industries and the sectors where those stocks lie. So this, if we stop here, we can see that this is a well-diversified fund, okay? 14.4% is in healthcare industry. You've got 18% in technology. You've got 12% in the industrial sector. You've got 15% in financial services. You've got just under 14% in consumer cyclical. So those are industries that are heavily reliant on the economic cycle. So stuff like the car industry. So when people have money, they buy a lot of cars. When they don't, they don't. So consumer goods and services industries that vary in line with the fluctuations in the economy. So it's well diversified. And we can also have a look at the regions. 63% is in North America, USA and Canada, basically, probably mainly USA. 20% is in Europe, 10% is in Japan, and you've got a little bit in the UK. And if you go further down in country, well, there you go. Yeah, 60% is in the United States, and then the other countries. So the European countries are kind of broken down here. So it is mainly European and United States. fund with a little bit in Japan. 10% is actually more than a little bit. In Asia also. And then going down further, we can see some of the companies. So holdings is also a very useful section to have a look at. And it will tell you the top 10 holdings in terms of, and those are basically the companies that the top 10 companies that the fund is invested in. And we can see that there's a bit of Microsoft in there. There's a bit of Tesla in there. Disney, Procter & Gamble, heard of those. Home Depot, interesting. Salesforce, Pepsi, Accenture. So solid companies, guys. Solid companies with good track records, global, multinational, present in lots of different countries. So this is a well-diversified fund, in my opinion. And then the two other sections that I want to have a quick look over with you are risk and rating. So we already saw that this is a 5-star rated fund, and a big part of that is because it is well diversified and the companies are solid established companies. Now you want to have a look at the volatility, which is basically a measure of risk, and the standard deviation is an important number. This is a number that I particularly pay attention to give me an idea of a fund's risk. And to put it into context, the standard deviation for Apple stock, which is considered, a prime stock, is 38%. So Apple stock, being one of the prime stocks out there, is more volatile, i.e. more risky than this fund, to put it into context. So this is a relative measure. And a good idea would be to look at the standard deviations for some of the solid global companies out there, your Googles, your Facebooks, your Amazons, your Apples, and see what the standard deviations of those are, and have a look at the funds that you choose relative to those. If they come in lower, that's generally a good sign. And then lastly, I'm going to look at performance. So this is a useful graph, and it's giving you the performance over the last 5 years. It's basically saying that if you invested right here 5 years ago, if you invested £1,000 in February 2016, it will be worth now somewhere in the region of, I say that's about 1,850. I'm estimating here, but that's a red line. The red line is this fund right here. And then what's helpful is that they give you this relative to similar funds holding similar stocks, i.e. other large cap blended equity funds. Okay. And you can see that this fund in red outperforms its peers in orange. And then when you look at the actual returns over the past years, you can see that return in 2017 was 26.6%. 2018 was -8%. And this is an important lesson here, guys, because we know that the value of stocks and shares can go up and down. So you're not guaranteed a return every single year. So you had a growth of 26% in the year. If you'd have invested at the beginning of 2017, your money would be up 26.6%. In the second year, it would be down by 8%. In the third year, it will be up by almost 20%. And in 2020, 30%. So those are chunky returns, guys. So far in the 3 months of this year, it's down by 0.85%. So just under 1%. But overall, it is growing considerably. So guys, this is the process that I go through to research and choose funds. A few key takeaways is look for funds that are diversified across sectors, across countries, and across types of assets. So in this particular instance, we're seeing that this particular fund holds growth stocks and also value stocks. Look at the costs, look at the returns, and make a decision based off of that. Hope that was helpful, guys. If you want to start investing, there are some great platforms for doing that. I've included some links in the description section below to Free Trade, eToro, Trading 212. If you check those out, you can get some free shares and some other freebies, zero cost investing. So check those out, guys. Like, share this with a friend, and I will see you next week.